United Bankers reported its H1 result on Friday. The market situation was, you could say, fairly tough still. The market is definitely not easy, but you managed well during that period. So how did you see? What were the highlights of the H1 report?
Well, as you said, the market was quite tough, but we succeeded quite well in the first half. It was the second best half year in terms of revenue, and we have 77 half years behind us. So in that sense, we did really well. The drivers behind that good result was forestry funds, as has been the story now for quite a few years. But in addition, management fee funds reached an all-time high, and also discretionary asset management mandates reached an all-time high. So that was really good. And also the AUM, assets under management, reached an all-time high. So we were quite happy.
Yeah, I think on the CEO review you also mentioned that if you look at the circumstances of the market situation, you were quite happy with the outcome, what you did.
Yeah, definitely.
Sales picture, it was, you could say, kind of twofolded in H1. At the same time, the wealth management and the structured product, they sold actually really well. But at the same time, you flagship fund, the key funds, they were still struggling to raise capital. So I mean, how did you? What do you think about the sales picture in H1?
As you said, some parts went well, and we had some challenges in other parts. But this is the benefit of having many pillars to stand on. The asset management mandates, there we sold for over 100 million euros. And this is really good because we have invested a lot in this, so we're happy that now you can see the results. Structured products had a really good first half of the year. The turbulence in April caused that we could build good products, and the investors that invested in the structured products are probably quite happy now. And on the fund side, it was a challenging market, but we succeeded in raising the residential fund and made investments for almost 50 million euros during H1.
Let's get back to the funds later, but about the wealth management. Your wealth management business has been growing really nicely during the past, let's say, 18 months or so. What have you done differently during the past 2 years or so that you have been able to accelerate the growth in wealth management, the levels, what it has been, since historically your sales focus has clearly been on your key funds, not in the wealth management?
Yeah, I don't think that we made that much differently now, but 5 years ago we started to invest more heavily into asset management, and that becomes, or that's we see the results now. There's two key things in asset management, and the most important thing is the team. We have been able to recruit really top talent. And the other thing that's really important is, of course, the quality of the services, and we keep on improving the quality all the time.
Yeah, it is. I guess it's also worth to highlight that the ramping up wealth management is a really long-term business. It really takes time to convince clients that your service is actually really good and get them on board, etc. It takes much longer time than, for example, ramping up a new flagship fund or so, I guess.
Yeah, exactly.
Yeah.
For us, it took, you said 18 months. It's now been better, and we started 60 months ago.
Yeah.
So
yeah,
takes some time.
Yeah, definitely. Then about the key funds, the key funds have been struggling to attract capital for a prolonged period of time now. So, what needs to happen in order your alternative key funds to attract more capital? Now we're talking about the forestry funds, of course, the real estate funds, etc. So, what needs to happen?
If you think about, for example, the forestry funds, they have generated really good returns. So it's not about the track record; it's more about the general market in alternatives. investors they have too large allocations to this sector now, and they have issues with liquidity. So it takes time, and we need to start seeing IPOs and more transactions. When we say that, then there will be more exits. Investors will get more money, and then the allocation to this sector will decrease for a while, and then they have money to invest more in order to keep the correct allocation to that. So it will just take some time, and it requires that the market situation changes. So
I know the forecasting, this is very difficult, but I have to ask, if you would have to put this in the timeline, when do you expect this to happen? When the market would start to work again in alternatives, so to speak?
I think we see it all the time. It's getting better all the time. We see more transactions on the market, but it's difficult to estimate. But I would guess that it's sometime during next year, because first we need to see the IPOs and more transactions, and then in a few months or with a few months lag, then you start again doing the capital raising, and investors start to invest again. So I would guess that sometime during 2026.
Let's definitely hope that happens. Let's still stay on the same topic about the sales. Let's look at the longer term perspective. Obviously, if we think about the key drivers for your growth, we are talking about wealth management and your flagship funds, of course, which you obviously will bring out new flagship funds from time to time and expand your product portfolio there. But what about international sales? What kind of role do you expect the international sales to have on the longer term growth picture? Obviously, you have been doing a lot of work in the international side, but still clear majority of your flow comes from Finland when we talk. So
correct. Our aim is to grow the international sales part all the time, and when looking let's say 10 years ahead, then I'm sure that the international sales will be a really big portion of the total sales. Currently we're discussing with big European investors in Central Europe, and what we see is that they are really interested in our products and services, but the processes are really long. But we expect to see results in the future, hopefully in the near future. But international sales, that will grow.
Yeah, and I guess it's fairly obvious that your strategy with the international growth is to go there with the really limited number of funds, like your flagship key funds basically, and try to attract capital to those, of course. I guess in that business you just need to be, your products need to be top notch in order to succeed there.
Yeah, they need to be top notch, and currently we're selling forestry, and that's a top notch product, but it's also big enough to be sellable there. For example, we have a lot of different really good products like renewable energy, but that fund is still too small for the international big players. But when it has grown, then we'll start selling that also there.
Yeah. Let's move to the forest products. Forest funds have become your largest product category if we count by how much revenue they generate for you, and obviously during the past years the carried interest what you have booked have mainly come from forestry products. So and obviously the forestry products, you and for your peers, they have yielded excellent results during, you could say, prolonged period of time. Yeah. Even though the interest rates have gone up, still the forest funds have been yielding excellent results. So what has been the main driver behind this, that forest funds have been able to generate so strong returns even though other alternatives and other, for example, real estate assets have suffered fairly large hit, you could say?
Well, one explanation is the inflation. Forestry is a really good inflation hedge, and as the inflation has been really high, also the nominal returns have been really high. But another thing is the wood prices. Wood prices has increased a lot during the last few years, and at least if you think about Finland, the wood consumption in Finland is about 75 million cubic meters or something like that. And demand increased quite much when I think it was around 7 million cubic meters due to new capacity that has been built. And at the same time, supply decreased by almost 10 million cubic meters per year due to Russia's invasion into Ukraine. So there's the inflation part and then also this wood price increase.
Let's talk about that wood price increase. Obviously, the sanctions for Russia have been the driver there, that there hasn't been so much wood flowing in. The market has been really tight, you could say, on the wood side. But hypothetically, if the sanction would be lifted at some point, there's a possibility that will happen, and the wood would start to flow in again to this market. What would happen in that scenario for the forestry funds and their returns?
Actually, we don't believe in that scenario that much, because in order to get the wood from Russia to Finland, you need the infrastructure, and you don't have it now. You don't have it there, and you need to rebuild the infrastructure. Historically, the infrastructure investments has come from Western companies, so I don't think that there will be much investments from West to Russia in the coming years. Then a big part of the import from Russia was energy wood, and I don't believe that wood should be burnt. That's not the future. So we think that wood from Russia, that won't be a problem for our funds in the future, or for the prices.
Yeah, interesting take. Let's see how the situation develops there. Then finally, let's talk about the asset management market in Finland. We obviously know that the market is growing. The market has some fairly lucrative features, you could say. So how do you see the Finnish asset management, like the market overall? Like how lucrative market is it to be at the moment, and how you see the growth drivers going forward?
Well, it's a good market to be in, and I believe it will grow. There are many trends in Finland that support this. For example, nowadays, or this generation now that inherits money.
Yes,
it inherits money. Not, I think you said it somewhere that before they just got the red cottage and the potato patch, but now they get the financial assets, and they don't invest themselves anymore. They trust in professional advisors, and that's at least one driver. And then the trust in the sustainability of the pension system. It's quite low, at least in the younger generation. So they want to invest and save money by themselves, or give it to professional advisors. So there's many trends. And before, the market was dominated by the big banks, but nowadays when we speak to clients, we see that they want more agile and service-minded solutions. So I think the market in general will grow, but also our part of the cake will grow.
Yeah, it's definitely one of the key trends which only people in Finland kind of understand, is that historically the pension system, it has been like the core backbone of our whole society basically, and of course it will be in the future. But the fact is that the pension promise for example for our generation, it's much weaker than for the generations before, and that's why I think a lot of the younger generations understand that they also need to save by themselves in order to get a decent pension package, since the public pension just don't cut it anymore basically over the long term.
Yeah, fully agree.
Yeah. Thank you, John, for the interview.
Thank you, Sauli.